All right, let's jump right in. We need to talk about your single biggest expense. I'm talking about housing. And what if I told you that everything you've been taught about it might actually be the very thing keeping you from getting ahead financially?
I know, that sounds a little intense, but stick with me because this is a really crucial idea. The whole argument we're digging into today is that our cultural obsession, with the big, beautiful dream home, might just be the biggest financial trap out there.
So what's with this number? Over $800,000. Well, think about a typical down payment. Let's call it 86 grand. If you took that cash and just put it into the stock market instead of a house, this is what it could be worth in 30 years. That's what we call opportunity cost. And yeah, it's huge.
Okay, so let's get into our first big idea here, the 30% wealth trap. This is all about how following the rules, doing what everyone tells you to do, can actually make you poor.
I mean, does this sound familiar? You look at your bank account at the end of the month and just wonder where all the money went. It's such a common, frustrating feeling. You didn't go on some crazy spending spree, but your paycheck just kind of evaporated. Well, the argument we're looking at says the culprit is usually hiding in plain sight. Yep, it's your rent or your mortgage.
You've probably heard of this one. For like decades, the 30% rule has been the gold standard. Every financial expert, every lender, they all say the same thing. Don't spend more than 30% of your gross income on housing. And the whole point is to make sure you have money left over for, everything else in life.
But here's the reality check. In today's world, for a lot of people, that 30% rule is basically a fantasy. The truth is, people are getting squeezed into spending 40%, maybe even more. And when that happens, there is literally zero cash left over to get that compound interest engine for your investments even turned on.
And what's the consequence? Well, when that much of your paycheck is automatically vacuumed up by your housing payment, you're not really building wealth. You're just working to maintain a lifestyle. You're essentially working as an indentured servant to your own living room.
And this is where it gets really interesting when you put them side by side. On one hand, you have the down payment. It feels like the responsible, smart move, right? You're building equity. But then you look at what that same $86,000 could do in a simple market investment. And the difference is, it's just staggering. The growth is on a completely different level.
So here's the takeaway from all this. That extra guest bedroom you think you need, that slightly fancier neighborhood, it's not just a room. It's not just a slightly higher mortgage. It's a massive trade-off, $1 million trade-off for your future retirement.
All right, let's keep this rolling. In this next part, we're going to tackle the big one, the myth of ownership. We're going to deconstruct that whole American dream idea that says buying is always better than renting. You've heard it a million times, right? Renting is just throwing money away. But that phrase, it's a dangerous oversimplification. It completely ignores this huge mountain of hidden costs that come with actually owning a home. And those costs often mean that renting is, believe it or not, the much smarter financial move. Yeah, your mortgage payment, that's just the tip of the iceberg. You've got property taxes, which can be thousands a year. You've got home insurance, that's at least another $1,200 or so. And then there's maintenance. The rule of thumb is to expect to pay about 1% of your home's value every single year on stuff that breaks. These are the costs that renters just don't have. They're relentless.
So here's a super simple practical rule you can use. It's called the 5-year rule. Basically, with all the high costs of buying and selling a house, on top of all those hidden expenses we just talked about, if you're not planning to stay in one place for at least 5 years, the math almost always says renting is the smarter move. Period. Okay, so we've spent a lot of time on the problem. Let's pivot and talk about the solution. This next part is the House Hacker's Playbook. It's all about how you can reclaim your biggest expense and turn it to your advantage. The main strategy we're talking about is something called house hacking. And it's a really powerful idea. It completely flips the script. Instead of your house being this giant liability that just sucks money out of your bank account every month, you turn it into an asset, one that actually pays you.
So how does it actually work? Well, it's surprisingly simple. Step 1, you buy a place with more units or rooms than you need yourself. Think a duplex, a triplex, or even just a house with an extra bedroom. Step 2, you live in one part. Step 3, you rent out the other parts. And Step 4, the magic step, you use that rent money to cover most or maybe even all of your mortgage. It's brilliant.
And the change to your budget? It's seismic. It's a total game changer. Suddenly, instead of 30 or 40% of your income just disappearing into a housing black hole, that number plummets. And just look at what that does.
It frees up this massive chunk of your income, in this example, half of it, that you can now shovel directly into your investment.
And listen, that is the key to this whole thing. Truly successful people don't just magically find money to invest. No, they reclaim it. They strategically attack their biggest bills and take that money back. That's how it's done.
Which brings us to our final and maybe most important point, because at the end of the day, this isn't just about money or spreadsheets. The real payoff, the real prize, is something so much more valuable. It's the freedom of optionality.
This analogy just nails it. Trying to build wealth when your housing costs are sky high, it's like trying to run a marathon with a 50-pound backpack on. You're just working so much harder than everyone else to even stay in the race. But when you get your housing costs under control, it's like dropping that backpack. All of a sudden, you can run.
And that's what we're calling optionality mode. This is the goal. This is what it's all about. It's having the power to quit a toxic job because you can. It's the freedom to take a chance and bet on yourself. It's having the confidence to take calculated risks, and just the simple peace of mind that comes from not having crushing financial stress. That is the real freedom you're buying back.
So I'll just leave you with this one final question to think about. Do you want to look wealthy today, or do you want to actually be wealthy tomorrow? It's about choosing between financing a lifestyle that looks good or building a real foundation of freedom that will last the rest of your life. We've seen the math, the numbers don't lie, the choice, well, that's up to you. Thanks for tuning in.